Hello, and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Today's agenda, we'll go through our market update. I got the earnings results for Q3, although there's still some trades out there. I got the Q4 plan that was pushed out for you guys subscribing. You should have gotten an email for that in this morning, and then Joe will go through some of his analysis at the end here. So some reason I couldn't get this to come up right. Anyway, there's your disclaimer. Did a couple of notes. We did push out and made public our new webpage. So yeah, the cool graphics, but better organized than before. So have a gander. If you guys got any feedback on that, let us know. But that's out there public, and also the new interface is linked there. So if you save the old one, you can still log into the old. But we're moving towards this new one. It's not totally complete, but we're kind of like 90%-ish. All the functionality for the most part is there. But we got to tweak some of the look and feel of it. But so that's out there. And I pushed the earnings stuff out in the folder. So all the analysis is in there. And that link comes in the afternoon replay. After we do the meeting, I sent out that replay link. So it's in there. Okay, so let's get started on the market. So SPX still in our most bullish state one. Russell still in 5. Same, ones across the board. Other than that, green pie pretty much steady at 75. We are getting pretty good transitions. 8's down to 18%, but we're getting stuff moving into 5, which is bullish. We're up to 34 in state 1, so that's doing well. One thing I did want to point out, just kind of at the beginning, this bottom here, 427. I talk a lot about the 10-year. So let's just kind of look at the 10-year real quick. You can see, we got almost up to 5% on the 10-year. So this is the 27th. It's pretty much just been straight down almost since then. So, I think that's been the market pretty much given a rate cut to itself here, basically from 5 almost all the way down to 4. So I think that's been one of the big things as far as the market moving, from that date. That was pretty much the top of the 10-year market there, right around there that week. And then things just really turned lower after that. So I just wanted to point that out at the beginning here, but you can see this is the individual states. So let's take a look. So we've had some good, let's just kind of look at the 5s and 7s. So, initially we like to see those 7s, especially when we have a lot of 8s. Those 8s really started dropping in beginning of November. November, obviously, a really good month of the market. So those started dropping. We see those transition to 7, and then we look for 7s to start going to 5s for the follow through market, and that's been happening pretty good there. So after that, we'd like to see the 5s going to 1s. The 3s really don't get hit much. It's kind of like an intermediary step. Like it'll go from like 2 to 4, then back to 3. But from the bottom, it'll go 8, 7, 5, and then 1. So we've been seeing good transition so far. So if that continues, obviously, so keep moving higher. We're starting to get some highs popping here. This is 52-week highs, so in a little bit, nothing crazy. But as we look back over time, this is when pretty much the bear market started. Getting all the new lows, right? So this nice bullish market getting highs all the time. So, those highs happen in state one, right? So that's when new highs are, 90 something percent of them are in state one. So we're getting more and more in state one. So then it makes sense that we'll start getting more and more new highs for the market. So we had that crossover for 1/8 back here, 22nd. So it's just been pretty much straight up for the state ones. So obviously very bullish overall. Um, so, but we're kind of near the lows. I mean, like here we got down to 10, here 20 on the state eights. So 14 on the state eights here, 16. So we're down kind of in that range. So obviously, we're a bit oversold in general. I mean, overbought in general. So, but we just don't know. Obviously, Fed today, so that can drive markets. But we could go a little higher before things start pulling back. But the pie overall, 75% has kind of been leveling out here. Obviously, if we stay at this level, it's good, because that means that the fives are going to one and the sevens are going to five. So, this one, just kind of keep our eye on it. And, the key levels too, obviously, are something to watch for. So let's look at the states here. So SPX doing a nice run. This is kind of like our typical come up here, pull back, and then run up. So we're up right near that first level of resistance. So that's above that 4,600. So that's, the range was 46 to 4,200. So we're right above that right now. But I think we hit that target one area. So this is going to be, some resistance, in this kind of range. And then, you get strong resistance up here, the third target, if we do get up that high. So we can expect some kind of resistance here. The other thing I'd be watching for is if we retest 46 and that holds, then that provides support, then that'll be very bullish for the market overall. So, right now we're at 20 days in, about halfway into the average. So these are trading days, a little more than half the average move. So, it's performing as expected for the state one so far. So let's pull up the chart here. Pull it out a little more. So that was the previous, 52-week high there, 4607. So we popped up above that. We're closing above that. Let's see what the current. Yeah, we're 4640. So that's like right below that target one area, but we are above the previous range right now. So, last time that hit that strong resistance, that was the bottom of the range here. So not quite going to call it that we're in a new range yet. Obviously, if we maintain above 4,600, then we'll have a new range, 46 to 5,000. Crazy to think about that. So well above any of the moving averages. The 50s, diverging, coming up higher than that 200. So it's looking bullish overall. So as far as this, I would just kind of make sure we staying above 4,600, and you can watch those transitions too. I think that's a important thing to watch. Each day what's going on in the states, and this is the new dashboard. We had 22 go into 7, 47 go here, 47 go here. Still had some going into 8, but majority are going, transitioning up the chain from 7, 5, and then 1. So you can see this is starting to look like a bullish market. Like All right, let me, someone's making noise. Okay. So like this, one of our overspot indicators is once this gets up to 45. So this is starting to look bullish market overall as we get more and more state ones, right? So, okay, I think that's it for SPX. So Russell, the usual problem child here. So 1900. The bottom 17, that's going to be off the chart here. But you can see this initial resistance range for this state, which is a 5, not as bullish as 1, but, still get decent movement, 3% on average. And then you get your strong resistance up here. But really, the key thing to watch here is 1900 as usual. I think we eclipsed that recently. Let me pull up the down today. Let me just pull up the kind of quick here charts. Yeah, I guess we didn't. The pre-markets were above 19, but it's not showing anything for here getting above it. So once again, that 1900 levels a problem for the Russell, and that's right in our target initial resistance range. And getting above that, staying above that, and with the SPX above 4,600, that would be very bullish, if we can get above that. But, that we could see, turn around here if this fails. And let's look at the longer chart in a second here. But on average, 6 days, over here, 6, on average, 18. So, still got a little ways, if it conforms to the average move, and it's doing kind of the average path for the state. So we'll have to see if that continues. Like here, you would expect a little pullback down to 1856, and then if that holds, then we'd expect another run up and trying to get above that target 2 resistance, which is right on our long-term resistance of 1900. So, okay, let's look at the longer chart. Sorry, so we'll pull this up. It's almost like a broken record at this point, talking about these, but 19 and 17. So we've had, the 3 breakouts, all lower highs, and then afterwards, broke down below, to the lower level, came back up and had strong 1900 resistance. So we had the down resistance, and then another breakthrough. So same thing here, broke down. So now we're getting up into what I would expect to be strong resistance for the Russell right now. You can see here, this is 1, 2, few months, for these. So, I don't know if it's going to repeat. It has been so far. So we'll have to see, but I would expect strong resistance here, for the intermediate term. Seasonal wise, we are in a bullish season right now. So, could break, but I would expect strong resistance, 1900. And that would be the thing I'm watching closest right now. Is if we can get above that, and if we turn down, I'd be watching 46, see if S&P, if that provides support, and we can get a bounce off that. If that breaks, then obviously you're back in the range. So, okay, I talked about 10-year. Obviously, that's dropped quite a bit, and so hasn't the inflation expectations. I'll just point this out because I think it's starting to come to fruition. This CPI versus M2, right? We talked about this for over a year, how this has been dropping, and the inflation readings are either in line or a little bit lower. I'll pull up the one from today. You can see here, like core down to 2, they expected 2.20 month to month. PPI year over year 0.9. So all kind of coming lower than most expectations. So if this thing holds, we will see like some deflation in the near future in the coming months. So just want to pull that up. We'll keep our eye on that. So meeting today, no hike, no cut. I think what is important is any kind of language coming out about how long they expect to hold these. 2024 is kind of a up in the air. Obviously, the market has their expectations. Let me reload this. It's not showing the longer term chart. Oh, here, let me pull out. Sorry, longer term. So now, our current is 525. So this time next year, they're expecting, anywhere from 1 to 1.25 cut. So that's what the market's got priced in, and that has been moving. These expectations have been going lower and lower, each month, each week almost, So you see here a month ago, kind of is right around 4.5, kind of the middle. So now, right now, it's 4. So it's dropped 50 basis points over a month for that's Fed action, So that's a lot of cuts, and we'll have to see what the Fed says because if this whole M2 CPI correlation holds, then this is definitely plausible. But the Fed still has to do be reactive to that. So if they see things dropping, they'll obviously have to start cutting, and hopefully we don't have anything break in the economy. So, and they can pull this off, but we'll have to see. Balance sheet, same thing, kind of running off, week by week, just having the balance sheet run off. So, I think the last thing is just I'll pull up the chart here. So obviously, pretty much peaks up here, just flat, and then get the big inversion. So on the 4.2 here, about 50 base point here and almost 1% between the 10 and the 1. So obviously that's why, a lot of money is going into short-term funds. It's the highest return with the least risk. This is definitely welcome to the drop in the 10-year for all those banks holding long-term U.S. Treasuries. I'm sure that's been helpful to the massive losses they've had so far. But we'll have to see how this all plays out. They're expecting all these cuts, but that doesn't necessarily mean the 10-year is going to drop, right? They still have to sell it. That's open to supply and demand as far as the market. So, but that's kind of where we're at overall for the market. I'll open up to questions or comments.
Hey, Josh Lee.
Hey there.
Hey, does the 10-year lead? You showed the correlation between the 10-year going down and the S&P 500 coming up. Does the TNT lead the stock market, and the market follows what the bonds are doing, or is it the other way?
Well, I think it kind of depends as usual, but I think, once we got up to that high, I think it was definitely driving the market, right? Like once we got up to five, we had a pretty good rundown. The Russell made, like 52-week lows and then basically reversible. I think once we're up that high, that it definitely drives the markets. Like when it's lower and there's like, I think it's more of the expectations of where rates are going. But that long-term chart, I don't know if I can pull it up off the top of my head, but if you look from like the 1980s, right?
Yeah.
For the 10-year, it's just been like straight down for a very, very long time. I don't know if I can pull it out here. Right, and we've had, this is just 2000, right? The 10 years gone from, six something. There we go. That's the 80s. Here we go. So, from here, we're at 13, 15, something like that. It's been, sorry, my computer's acting slow.
I see what you're saying.
Yeah, sorry, it's just not behaving. My clicks. Yeah, so there's definitely been good Lord. I don't, sorry, this is acting weird. But you could see back there, and it's just been
Yes.
pretty much down, all the way up until here. Where this pretty much like broke the trend line almost, right in here. So that's where things started getting sketchy, right?
Yeah. Yes.
So this is start of the bear market right in here, right? And then these things spiked, and it's just a matter of can it control the inflation? And it seems to me like if that CPI stuff, because they're decreasing the money supply, so that's going to help. I think that's the biggest tool they have. Decrease in the money supply, whereas rates will just slow down economic activity. It's going to hinder people from taking credit, because it costs a lot more, but
Right.
if they're decreasing the money supply, that I think that's the big driver. So,
All right. Thank you.
Sorry that chart is acting crazy. Okay, anyone else? Questions, comments? Feel free. Okay, move on.
Mr. Dave,
Yeah.
can you hear me?
What's that?
Can you hear me?
Yeah.
Yeah. On one question on the portal, the new portal and the transitions where you put state 1 is 47 and state 8 is 47. Some of those states are there for like a brief amount of time. I was just checking. I think on your website you have the data all the way from 2007, right?
Yeah, all the way from 2007.
So even the short transitions are counted in this. Like
What's that?
Imagine if the state 8 is in just for like 2 or 3 days, because there is sometimes a transition, but from 1 to 5 and then like immediate 3. All of those transitions are counted here?
Yeah.
Okay, thank you.
Yeah, I mean, just kind of big picture, like not all state eights are going to be like great, right? But or all state ones are going to be like terrific states. But like it's this huge move isn't going to happen unless it's in state one. And the same thing with like eight, like the huge downward sustained movements aren't going to happen unless it's in state eight. So that's kind of the key, but not all of them. It's not a perfect solution, but it gives you, okay, something really good could happen. It's in state one, right? Or something really bad could, happen, if it's in state 8. So that's kind of the key there. And then obviously, I think, you know, once it's in that state, I think the targets are very important, you know, for those levels of support and resistance. And you can just go back in time here in the time machine and, you know, look at all the different times. Like it's just, you know, I've seen it within like a penny, you know, of target 3 and turn around. So I think that's the key to watch there.
And while you're here on the screen, it says average days is 43. And right now, the current days we are in the state is 20. So let's talk about like how we can use that data, or like how accurate is it in the past states?
Yeah, so like really what you want to think about is, you know, when it comes into a state, you kind of want to plan for what happens on average, right? So it's not going to happen every time. You know, one time it may just turn, right? But on average, it's going to come up here, you know, test the first level of resistance, you know, come down, find support, and then run back up. And then, you know, maybe 30% of the time, you know, get above that target. And all the other times it's going to come back down by the time of the average days. And then it'll go to like 2 after that, right? So that's kind of the average. And this one's, you know, acting pretty close to average right now. You know, not ideal. Like ideal, it'd be kind of like right up, hit that target, and it would be coming back on support in the next few days. But you know, they're not all exactly like that, but a lot, you know, that's kind of how you would plan for the average occurrence to happen.
Perfect, thank you.
Okay. All right, so I'm going to pull up earnings. All right, earnings results. All right, so we're profitable. So you can see, all right, so I'll just go through all these tabs here. So this is available in that shared drive link that I sent out to Google. So this is last quarter. Obviously, we had a really good quarter, especially, you know, the non-movers did well. Pretty much everything except for Vol Rise did well last time. Yeah, with a pretty good win percentage, but you know, not fantastic. We've had better quarters, but this was definitely, you know, pretty good, you know, like a good quarter. You know, Q1 was bad, right? We pretty much broke even on that one, but that was a pretty rough market wide, you know, overall. But there's Q4, so that's the last 4 earnings that we've seen. So it's gonna hit, you know, like hit, miss, not miss, because you're not really losing, you haven't lost, right? So here, you know, not a great quarter, but you know, still profitable overall. But you know, definitely off from the previous ones. So the first one, you know, the bullish pre-runner, so those run up into earnings. So pretty bad win percentage overall. And these just, you know, since the market kind of turned, you know, these have been haven't done as well. You know, before the pandemic, these were like fantastic. Like these were like crushing. So it's just a different market now, but you know, still, you know, even though not a great 1%, you know, still came out profitable on those. So, you know, 7 out of 12 were winners. You know, we still had 11 that didn't have confirmed trades when those trade, you know, when they were supposed to. So, you know, we just don't trade them if we don't get confirmation on the earnings date in time. So, bearish pre-runners, you know, there's only 2. You know, there's 50-50 there, and you know, like 3 didn't hit. Vol Rise, we had 1 that, you know, didn't trigger, and then the other one just pretty much did, you know, that was Disney, barely profitable. The good one, obviously, this time again was non-movers. So we had 6. We had 1 pretty strong loss there, but the other 5 obviously made up for it. So these are great trades, risk reward. Usually, you're risking like 1,000 to win 2,000. So, these have been good trades for us. Good win percentage there too. Bullish runners, 80% win rate, which is good. I think we had one that was a pretty good loss, and then the other one was minimal. But overall, cleared, almost 1,000 on those. And these are just risk, you're risking like 1,000 per trade pretty much. And then bearish runners is the thorn in our side. A lot of these started coming after. I'll show you exactly, like after that date, and here, like they started pouring out here. So, it's just been bad, it's bad timing overall. But, we still have 5 of those that are open. So these aren't final numbers right now, but these are the final trades, but we still have 5 open. So those other 5 are like down another 500 currently, but still, they have time left in those trades, so they could turn around. We have one profitable, a couple of them are close. This one obviously has been hit pretty good, but I mean, if you look at it, it's only gone up $3, but it's getting beat up pretty good. So we'll have to see. I'll update this once all these trades are final. But overall, not a great quarter, but you're not losing money. And you're waiting. It just seems like we go back here, like great quarter, nothing, great quarter, squeaked out a profit on this one. So, I think you just keep playing it and, following the trades. I know we have a couple people do this, and, they've over time, made good money on this. So we'll keep doing it and keep tracking it and give you the realistic results. So that's any questions on the results here? Okay. So like I said, in that share drive, you have so you have the results, and then all the testing I did for those other trades. So I'll just walk through one real quick. So if we look at like bullish pre-runners, so this is all done in, let me move this thing out of the way. This is done in the earnings scanner. So you see the different trade types here. So what I do is just set up the criteria. So this is search criteria. 15 days before earnings, it goes up at least 3%, 7 out of 10 times. So what I'm doing is scanning what we have our liquid stocks, which is, I don't even know the number, like 400 or something. So that'll give us a big basket, and then we go through and test. Then we go through and test this bull put strategy, 50% profit, and then our strike setup down here. And we test those going from 20 days all the way down to 5. So you can see over here, here's all the results. A grand total of, Jesus, almost 1,700 back tests. So what I do is take that, filter it down by win percentage. So this tab right here is for over 80%. So you can see there's quite a few. I only include 90 for the test, but you have 300 that had a 1% over 80. So what I do is I take that top 90%. And then, so they have to have a win percentage over 90, profit factor over 80, and then any other conflicts with like pre-earnings trades. If they're in both, I pull it out. So here's like the grand total for bullish pre-runners. We got 14 total, and then I pulled this one out because the risk is too high. We want to keep the level risk right around, a little over 1,000 per trade. So this would be 4. It would skew the results. So I pulled that one out. But obviously, you guys have all those. If you want to trade more, you can look, down into the details more. You can sort them, by name and stuff and look for different trades. But it's the ones that we put out, and I think we have. So we do that for every single trade type. You got, bullish pre-runners, bullish runners, so it's going higher after earnings. This is bearish before earnings, bearish after earnings, non-movers, so that's a one-day trade. We don't expect the stock price to move much around the earnings. Same with the vol crush, and then the vol rise is just increase in volatility going into earnings. So all the testing's available for you guys. You can download them, play with them. It's all in there. So that was it on earnings. Any questions on that before I throw it over to Joe? Okay. All right, Joe, they're all yours.
Okay, Josh, thank you very much. Good job. Hi, everybody. Let's see, a couple things. Let me open this thing up. There we go. So just, let's see. You can see the screen all right there, Josh?
Yeah.
Okay, so just high level, the industry sectors, kind of we talked a little bit about the indexes and some of the leadership in the sectors, having time in terms of being in bullish states. What do we have? We get 6 various sectors in state 1 at this point, and all of them, have a couple weeks just in terms of average time in that state. What do we have? 10 out of 11 sectors are in bullish states, and the only one that isn't is energy. We've been talking about, downward move in energy. So, Josh keeps talking about that backdrop of a positive environment. I'm going to continue to make that case with a couple numbers also. Just a couple charts, TLT, which, we try to pull up. We're state 7, now state 5. It'd be interesting to see whether, gosh forbid, if this thing can ever transition into a state 3 and a state 1. Hard to say, but, had a pretty good run on the bonds, as Josh talked about. Oil, we talked about this last week, the 5 waves down. We've extended that downward move. So that's a bit of a tailwind for the markets. And let me see what we got. XLK, which we've talked about. I was talking about this last week, just saying that I think if we're going to get another leg up on the market, which I believe we're going to, XLK getting through this target 3 at 187 recent high would probably be, a good sign. And certainly that's what's happening here. So there are just a few of the charts I wanted to bring up. Sudhir's got me thinking more and more about, the power of the pie, and I'm going to get into that. And I will get all these numbers down on the sheet for everybody on a share drive. Have a little different analysis of it today, which hopefully you'll find somewhat interesting. But before we go there, this bullish backdrop, I think, we got to have support from earnings. And, I just referred to Ed Yardeni and his work. And then, on the left-hand side, it's Ed's numbers. And then he's got a bunch of economist consensus numbers, to the right. And, those numbers, I mean, when you look, we're all along, there was talk that the first and second quarter would be the nadir in earnings, and we'd get, some upside movement in the third and fourth quarter. Third quarter, I think, may exceed, a 3.5% number, which, are looking for $58 for the quarter. I don't, that's still estimated that's probably going to come in a little bit higher than that. And as we've been talking, the fourth quarter, the pros are looking for double-digit growth in earnings, or at least Ed is. So it'll be interesting, obviously, to see how that plays out. But I think in terms of the forward look for the market, beyond the seasonality of, the last couple weeks and the next couple weeks, what may 2024 bring? And so, from an earnings perspective, Yardini's looking for, a nice increase in earnings from, say, 225 for the S&P to 250. I mean, if you take, and then, the consensus number's a little bit lower than that at 245, but big numbers. And, when I step back, look at the market, I'm guessing, a lot of people possibly have, pulled money out of the market, put it into, treasuries, and they're looking at their 4.5%, 5.5% returns. And that's great. No risk and, nice healthy return, from a nominal perspective versus inflation, it's not the best return, but, at least it's something not insignificant. But if we're going to get, if earnings surprises, potentially to the upside, and that is a big caveat, where might the markets go? And that takes me back to the pie. So I am going to, I'll just leave, the homepage up, but I'm going to go through some numbers for you. And I will, as I say, get, the extremes below 15%, above 80 and 85%. And as Sadir, mentioned last week, these consecutive days, where the pie goes up, the pie goes down. We're in the process of working on that. But I spent a little time on the upside consecutive days. Going back to 2007, 21 times the pie has, consecutively gone up 15 days or more. Okay, so 21 times the pie's going up 15 days or more. I didn't want to go in and basically I look at, the higher the number. I'm not necessarily, looking for tops with these numbers. Not at all. It actually suggests to me underlying strength in the market. So, I went in, and again, it's a little bit arbitrary, but I it's the 15 days. And then I took a look at the pie and how many times did we have 15 consecutive days where the pie got over 80%. So out of those 21 times, 7 times, okay, we had 15 consecutive increases, in basically the breadth of the database. 7 of the 21 times, the pie basically in that consecutive run topped out at 80% or higher. And just for, for perspective, and let's see, for the most part, it happens one time a year. Okay, it happened one time in 2008, and I'm getting away a little bit from the bullish case here, but just to give perspective, the overall markets, we know what 2008 was. We had 17 consecutive days, and it topped out in August of 2008, where the pie grew 17 consecutive days. The pie was at 39%. In 2008, which again, that's why I like to look at a lot of different numbers, big picture. That we know what 2008 was, and it's not inappropriate that high, was, below 40% after 17 consecutive days. It tells you what a disaster the markets were, back then. But back to over 80%, 15 days or more, it's happened 7 times. 5 of the 7 were 2012 or below, or before, excuse me. 5 of the 7. So it's only happened 2 times in recent history where the pie has been above 80% and we've had more than 15 consecutive days. I'll go back, in time, in 2009, and I will put this on paper for you, but, in 2009, after, okay, and again, I'm looking at the markets after we have these consecutive runs. In 2009, the market ran another 15% over about 5 months after, we got this consecutive run, okay, without really a pullback. It basically ran 15%. That's in 2009. In 2010, we basically got a 21-day run in the pie. In 2009, it was 18 days. In 2010, we got a 21-day run. We did get a pullback of about 10% after that run, but the market, from the point where we had the consecutive run, ran 18% over the next 10 months. So you pulled back a little bit, but then it ran 18%. Not from that 10% pullback, but from actually the S&P at that time was 1146 in the S&P. That's 2010. 2011, 19 days consecutive. Again, we got a pullback, after we had that 19-day run, 7% to the downside, but boom, up another 14% from there. So there was 2012 rocket shot. Basically we had 20 consecutive days. The pie. I'm sorry. The pie. The last couple of years. Again, these are all 3 years where the pie exceeded 80%. In 2009, the pie got to 87%. In 2010, it got to 83. In 2011, it got to 82. And in 2012, it got just shy of 86%. In 2012, market ran 25%. So last year, prior to the more recent time period, was 2013, 18 consecutive days. We had a little short pullback of 3%, and then the market took off 21%. That's in 2013. So in those 5 years, basically you had some strong moves upward moves in the market after consecutive increases in pie, and the pie itself getting north of 80%. So again, I don't really look at that pie above 80 as a topping mechanism at all, more underlying strength. So we went from 2014 to 2019 without any consecutive days and the pie being above 80%. We actually in 2014, 3 times we had consecutive, pies in increases above 15 days, 3 times, but the highest the pie ever got was 72%. So I was really only looking at, again, the pie above 80. In 2015, we didn't get any days of, consecutive pie increase by 15 days or more. It did happen 3 times in 16, but not to, the pie above 80%. 2017, 1 time, none in 2018. But then we come to 2020. And as it turns out, the number of consecutive days was the longest on record so far at 28. You know, last week rather, Sudhir, you know, talked about the recent period. I believe that's going to turn out to be 26. I'm still going back and forth with our IT on that, but it looks like that'll be 26, you know, the recent run up. But in 2019, we had 28 straight days and the pie got to just shy of 80%, or just over 80%. And, you know, from that point, basically the market shot up another 22% over consecutive months. So, you know, if you take a look at the chart, you know, from early February 2019, you know, basically you get the market going up, you know, 22% from that point. I think, and I didn't reverse engineer these numbers at all, but then the more recent period in 2020. So we did have 27 consecutive days in early 2020. Remember that was COVID. Turned out to be the end of April, where we had 27 consecutive days where the pie increased, but not as dramatic as 2008, where the pie topped out just below 40%. We had 27 consecutive up days of the pie, and the pie only got to 64.8%. But again, that was coming out of COVID. You know, we were single digits. I think the green pie, I forget, Josh, whether the green pie bottomed out at maybe 4% in March or April. So, you know, well, I guess that would have been March, but 27 days later, you know, where the pie increases each day and the pie is still at 64%. But June 10th of 2021, the pie increased, well, leading up to June 10th, the pie was up 17 consecutive days. And the pie at that point was 92%, you know, an all-time high in the pie, I believe. What happened to the market over the next, I think, yeah, basically the next year? Market was up 33%. 33%. So, and basically, you know, I'm just making a case that the surprises are going to be to the upside. You talk about, you know, earnings that Yardini's talking about at you know, maybe $250 next year. He's throwing a multiple at 20, which I know is high historically, but you're at 5,000. You know, the market gets legs and gets above its all-time high. You know, people are going to be looking at one another saying, you know, man, I missed this move. And it wouldn't surprise me one bit if that's what happens. And I think the pie may be telling us that. So we haven't gotten 80% yet. We're 76 and change today, I think, 75.3. So as I said last week or the week before, I think this move is going to take, you know, the pie into the 80, 85 range. And, you know, if history repeats itself, and it doesn't always, and certainly never the same way, but I think it suggests that there's some unexpected, you know, strength coming to the market, you know, in the year ahead. So, again, I owe it to all of you to get this on paper, and I will, but happy to take any comments or questions if people have them. Speechless, Josh.
Yeah.
Anybody?
Well-
Sudhir, did you follow even IBD calls this as a super trend? Did you ever hear about the super trend concept from the IBD guys? I can share that video because they did a lot of research similar to you. It's not the pie, but they did a lot of research on the super trends, and they say right now the market is in a super trend. Did you hear about it, or can I share the video with you?
I'm personally not familiar with it. I'm not sure about Josh. Would love, you know, appreciate you offering that. Would love to hear it.
Yeah, I haven't heard of it.
Okay. Yeah, I'm going to send that video. They did a similar kind of research, and now similar to you, they say the market is in a super trend,
Yeah, yeah, I'll take a look at it.
and maybe we can review it in the next session next week.
Yeah, I'll take a look at it, and do a quick review and give you our opinion on it.
The only other question I have, Joey, is like, since you have done the research and now we have like a higher probability that we are going high, and also to prepare for the future, like what would we need to look at using this tool to prepare for when to enter the inverse funds? When can we say like we are hitting the max, and when you have done these transitions the 21 times or whatever has happened, and or the last few times, did you do any research on like when is a better time to invest in the inverse funds like SH or any of the short leverage funds?
I have not done that yet. You know, as you hear, you know, it's pretty high level, just taking, you know, some of the big numbers out of the database. And so I have not gotten more granular at this point.
Thank you.
Okay, yeah, good questions. Yeah, we're always, bearish trades are the hardest, just based off of how the market's been behaving, but they're hard to, a lot of those moves are quick down and done, in a few days, sometimes longer, but, those are tougher trades to find and like quantify, some kind of like finding a systematic bearish trade's a lot harder than finding bullish ones. So, but we're on the lookout. And we'll always do further analysis. Trying to find stuff like that. So, okay. Anyone else got questions, comments?
Yeah, Josh, this is Russ. I just happened to look into your new website. Where is your high probability and screener?
Yeah. I'll take one.
You got the screen, Josh?
Yeah, I'm getting it. There we go. All right. Under trade ideas, these proprietary trades. So we changed it up, obviously, but it goes through all the different types of trades there.
Oh, so it's not on the actual website tab.
No, well, we changed the format of it. We took basically like the summary of it and put it here, and then that's this is how we're displaying it now. If you have a question when one pops up, you can always
I mean, where would you see the results?
that in the new UI, that's this gives you actually, yeah, it's still here. This gives you the results. So each day, whatever comes out, it gives you the results, the occurrences. You can look at the report. If you click the study, it'll give you the criteria there, and what was tested. And then this is the old web page that'll probably get changed, but this is the old one where you can click and look at the different trades. It goes through and analyze, shows you charts, all that stuff. So that's still linked in there.
The old page gave you a list of all the high probability, Kettler channel, the RSI, or whatever the case may be, but I don't see that like a list drop down.
That's here. That's these. They're all in the tabs. That's all the different names, right? RSI.
Those are the names, but as far as which symbols are associated with coming up at that day.
Oh no, yeah, that's in this proprietary trades under the trade ideas. That's here. And you'll still get the email. But this is that's where it is. Delphian proprietary trades. We just changed the name of it. So that's the symbol that popped up today. CNC, I trend very bullish. So that's the only trade today. But you can go
Okay.
back and look at, the different days and see what populated there, right? Hadn't been a ton of trades. There was a lot of trades, and then we had the big bullish run, and a lot of them closed out. So we kind of have to wait for the next pullback for things to reload as far as the trade. We're still getting a little trickle, but we had I think like quite a few. Like one of the trades I think had like 40 trades open at one point, and we're down to like 8. So a lot of them closed out. But yeah, it's just under trade ideas, proprietary trades. Then the earnings are here, earnings trades. So it's just a new, a lot different, but it should be fairly well organized, like sector analysis, the market pulse, and you can just go around. You can, it's just organized a little different. Save work, the brokerage is over here. So just organized a little different, but the same things. We just feel it's a lot better organized, for people. Like here's the trade scanners. That's if you want to do the transitions. And this has a drop down for all the other different types, with state targets, studies analysis, all that. So that's all in one now instead of piecemeal here, state transitions, study, so we try to make it a lot simpler for people. So
And
just take a look.
where's the one that you do your own scan? Like you want to see, particular symbols or candlesticks or whatever that you could select it.
Yeah, the candlesticks is here. These are obviously you can change the criteria, but these are going to be scanned off this stock list and then, whatever transition. So these all transition to state 1 today, so you can test those. This was on the 1st. Obviously, I'm back in time here, but this is, this will search to find all the symbols that met whatever criteria you put in there. So that goes for all of these.
Like if you want to look at stochastic or LSI, and if it's or earnings or something like that, you could scan it.
Well, you still have the screener where you can
Okay.
put in whatever, this is a new kind of format too. So you just like add signal, and then if you want to do stochastics, you put
Okay.
in
So
whatever
it's
criteria there.
it's under the scanner.
Yeah, that's a custom screener.
Okay.
Yep. Mhm. Yeah, just poke around, and if you have questions, just shoot me an email about the new layout. We're transitioning to this. This one's still available if you have the link, but we're moving to this, and it's mostly done. So okay. Anyone else? Questions, comments?
Hey Josh, I have one question. Can you help
Yep.
me with AVGO stock and state modeling? My question is like, how can I use state modeling to enter this stock?
Well, I'll tell you what.
AVGO?
I'll tell you what. The other Sudhir, we have another Sudhir. He's usually on the call. What he
Yeah,
does.
I'll be this is too.
Like he'll go in and like he'll go into this this trade scanner, and then he'll look for transitions like state 8, and he'll set up his trade how he wants, right? So I'll just put in like a bull put, and he'll go through and analyze these trades to see if there's like a good trade available based off of his strategy. And you can just click through and execute those trades like pretty quickly to find out like, okay, this one's 80% win rate. And you can change all the characteristics here.
But can you enter your own stock here? Because it's already populated with some other symbol, right?
Yeah, no, not the, so if you want to back test your stock, you can't just say, I have a stock back tested. There has to be a criteria, right? In order to back test it, like why are you getting in? Is it RSI or is it EMA, or, something else? Like there has to be like a criteria, to
Do you mind
trigger.
going into the state modeling and putting in AVG here? I just have a quick question on the how you
On
need
the-
to look at
When,
analytics and state modeling and AVGO.
say it again.
AVGO.
Okay. We will be moving to cloud, and this spin will be going away in I don't know when, Joe. But right now we're on our own
So-
server. Good.
Yeah, sure.
Yeah, so Josh, on this, like if you saw like earlier, you said it's kind of having that move. Its current days is in 27 in state one and average days is 36.
Yeah.
But most of this stock, like you had a similar kind of move when you look in the bottom on May 25th and May 26th. And I think they're kind of having the same kind of move we had in those 2 days.
Yeah, that's like right around the earnings there.
Yeah. And
Yeah.
so how can you, if you want to have a long-term investment in this stock, how can you use this state modeling to get a better entry point? Because it has this big move suddenly, like if you see in May, and then like right now, and this is a great stock to hold long-term with the business they are in right now. And
Well, I mean, like, so if you look at this longer term, right? So, here, back here, you're in 7 and 8, right? So like this is from there, 175, and then since then it's gone 1, 2, 1, 2. That's like a very bullish stock when it's doing, run up, pull back, run up, pull back, run up, like little pullbacks, run up. So, this, like you can screen for stocks that are doing 1, 2, 1, 2. I mean, as far as this specifically, obviously,
And
I
how
don't
do
know.
you screen that when you say like you can screen stocks which are doing 1, 2, 1, 2? How do you do that?
It's in the screener. There's a specific signal in state modeling. So you can do state path. And then you can
Oh, that's
find,
beautiful.
so you can find different stocks like that, or you can do 2, 1, 2. So you're looking
But that
basically,
gives you the last three states, the current state,
right.
and the last 2 states. Got it.
Right. Yeah. Yeah. I mean, as long as it's in your symbol list too.
And why did not we get AVGO here? I thought it has 1, 2, 1, 2, right?
Yeah, it should be in there. It might not be in that liquid list.
Yeah, it may not be.
Yeah, it should be in there. Maybe I might be doing something wrong. Previous, current, previous.
Current is 1 for sure. I think previous was 2. Let me check. I opened it here on that. Yeah, previous was 2, and then
Yeah.
previous is S1.
Yeah, I would think it would be in there. We'll have to check that, but yeah, I'll make sure we'll verify that why it's not in there, but this is the way I would do it. Yeah, we'll verify this data, make sure it's coming in properly.
This is awesome. Thank you for sharing this. This is
Yeah. Okay. Anyone else before we wrap up? Leah sent me a message. You get the old, do I need to change the link? So if you go to the new website, you can, because you have the old, if you have the old link, if you click this This will take you to the new link on the web page, that login. So it'll take you to the new interface. All right.
Hey
Okay.
Josh, Dan here.
Yeah, Dan.
When did this interface, the new interface come out? This is news to me.
We've been working on this for, I don't know how long.
Too damn long. Yeah,
Like a year.
long time.
Yeah.
I know
we
it's
did,
been, no, when was it rolled out to us?
Friday.
Oh,
Like
okay.
we had sent it to the group like that we're on that call that week. We gave them the link to it. But that was probably a few weeks ago, maybe a month ago. But
Oh,
you know, yeah, once we put the new website out, we put this out with it, and you know, there's still a few kinks in it. So but that's why we're putting it out there. So we, you know, only using this, and if you guys see any problems, just shoot us an email and we'll make the corrections. So it's
Okay,
almost,
beautiful.
it's real close to ready though.
Yeah, yeah. All right,
Mhm.
thank you.
Sure. Okay, good questions. Anyone else? Okay, we'll wrap it up. Thank you guys for attending, and we'll do it again next week.
Have a good week.